Well, I want to welcome our next guest. We have Brian Hoops on the line, and he, of course, is with Midwest Market Solutions. He is based in Springfield, Missouri, and he joins us right now, live and direct. Brian, this morning, of course, this is the final trading day of August. So here we are facing September coming up just around the corner. But we have a lot of business to get done today. Today is, it's going to be first notice day on all the September contracts on the grain markets, correct? Today also means expiration of the August live cattle, I guess, correct? So
That's correct.
We did have some delivery notices posted this morning, and I want to get your thought on this, and I want to bring these up for our viewers at home to take a look at, and for everybody watching on RFD TV Now, the app. Let's take a look at what deliveries were this morning. Man, wheat. 1,000 contracts posted for delivery. We had the rough rice, 382 contracts. Soybean oil, 236. Kansas City wheat had 102 contracts. And oats, 47 contracts posted for delivery. Now, that top line that says wheat at 1,000, I would assume that means Chicago wheat, since it doesn't have the Kansas City identifier there. But that seems like an awful lot there, Brian. Is that leading to that pressure, especially in that Chicago wheat market today?
Yeah, good morning, Marlon. That is the Chicago deliveries that you're talking about, 1,000 contracts, and that did pressure the Chicago futures, as that was much more than expected. Minneapolis also had about 283 contracts being delivered. That was probably more than was expected out of Minneapolis. And so those markets really were under a lot of pressure this morning, broke through some chart support and set off some sell stops. And now we're starting to see Kansas City trying to gain back some of its losses. In fact, some of the new crop contracts trading higher on the session while everything else is sharply lower. The corn and beans really, didn't take much away from the deliveries. We didn't have any deliveries of corn and soybeans, but yet they're under a lot of pressure. Some really good rains overnight in parts of dry areas of Nebraska, Iowa, into even Minnesota. The Dakotas had some rain. Those areas badly needed that moisture, and this is really going to help out their soybean crops, late filling corn. And that's what I think the market's taking a lot of notice here. Plus, you had reports of some export disruptions because of the hurricane and knocking out some facilities. There was a cargo of corn that was sold to Taiwan. It likely would have been sourced from the United States, but instead it's going to be sourced, I believe, from Argentina because of these export disruptions. That's what the market's trying to factor in yesterday and today.
All right, so on the corn that you're talking about here, we have it down, let's go with December, down 15.5 cents right now at 5.27 1/4. That's a pretty big drop, double-digit drops on all the contracts on the corn here. And as we mentioned, September is in first notice day right now. On the soybean trade, let's take a look here. We have the November new crop contract at 12.87, and that would be 16.25 lower. So about the same as the corn, actually, to the downward side. Soybean meal today, let's take a peek over there. We have October down 40 cents at 344.60 per ton. As far as the soybean oil market goes, you have October down 204 points at 57.66 per hundredweight there. Let's take a look at the wheat. And in Chicago, we were talking about the heavy deliveries there. We had December down 5.25 now at 7.18 1/4, but that's not the whole story, because a little while ago it got as low as 7.07, about 11 cents, almost 12 cents below where we are now. And we're still roughly about a nickel lower. Now, on the Kansas City market, you have that December contract currently down 3/4 cent as it tries to claw its way back. It's at 7.11 3/4. It has regained about 13 cents from its earlier low this morning. Minneapolis spring wheat trade, you have the December contract now quoted at 9.03. That would be down 6 3/4 cents on the day. Cotton has really taken it on the chin, down 155 points at 92.68 per pound. We'll be back in a moment. We'll take a look at that livestock trade with Brian coming up next. We are talking with Brian Hoops of Midwest Market Solutions. And Brian, yesterday we had more on the beef cutout saga, where in the afternoon update, we had the values on the choice cutouts, and we also had the select cutouts going down sharply. We had them both down over $2. Choice down $2.56. Selects were down $2.97. That is not necessarily very helpful when you're trying to boost up the futures trade. So let's take a look at what futures are doing here today. We will get new updated mid-morning numbers here in about a half an hour. But October live cattle are under pressure. They're down 72 cents at 127.60. On the feeder cattle side over here, we now have the October contract 27 cents lower. We're at 168.67. And that's almost a dollar from our earlier high this morning. And now let's take a look at our lean hog trade. Currently on lean hogs, we'll go with that October contract. We're down $1.55 at 88.60 per hundredweight. That's also about a dollar off of its earlier high this morning. Brian, what about that cutout value and its relationship here to the cattle market? Haven't seen any cash cattle trade yet, but connect the dots here, if you would, for us here today.
Yeah, Marlon, as you mentioned earlier, August is going off the board today. So it's, kind of lining itself up with the cash markets. We're in that 121 to 123 range last week. We could see, I think, a steady market once again, but even if you do, you look at October board, 127, well, that's a big premium over the cash markets if we trade steady. The show list numbers coming in nearly identical to a week ago. The problem with the cattle market has been the cutouts. We've been declining for a week now, and they really have not shown much stability. There was one day last week where they tried to bounce, and since then they've been down very hard. And that's kind of what's going on in the hog market as well. Big drop in the cutout values last night has sent the futures markets lower. The one thing I'm real surprised about in the cattle and the hogs is that with the lower corn prices, you're really not seeing much in the way of gains in the feeder cattle market.
Yeah, let's take a look at the pork cutouts, if we could here, just to get everybody updated on what took place there. The beef cutouts were lower yesterday, but on the pork side, down 687 at 109.72 per hundredweight. All the primal cuts, or the major ones that we follow anyway, were lower. Loin values down $1.31. You had the hams down 16.16. You had the belly market down $11.93. As I mentioned, we'll get new updated information in a little over half an hour from right now. Thanks for the info, Brian. Good to check in with you again. Brian Hoops of Midwest Market Solutions. Janet, turn it back to you.